Don't place a trade based on what you're seeing in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Hey traders, I just wanted to do this quick follow-up video from the video that I actually did today on silver and gold. And I've been seeing some comments not only on today's video, but I've been seeing a lot of comments on videos in the past, plus also some things that I've seen, mistakes that I've made within my trading, and also some of my private clients as well too are guilty of this as well too. But hey, it's all a learning curve, right? So this video here is not talking down at you. It's just to try to help you out within your trading. See, one of the things about the stock market and one of the things about trading, it's never really the market that gets you, okay? It's never really, I don't really believe it's the system that gets you. If we're honest with ourselves, right, it's us that gets us. We're not consistent with the markets, right? We're not really disciplined at sticking at one system. We're not, even if we do take a trade, we might get out because of fear and all these other gray areas, right, that goes into trading, that makes a good trader, has nothing to do with the trading system. And one of the things, as you've seen from the title of this video, right, is please don't chase the market. And I really want to stress this enough. Here is the thing about trading, and one thing that I really have learned from one of my earliest 7-figure mentors. When you're trading the markets, okay, whenever you're trading the markets, if you are about to enter the market based on what you think is a good idea, well, I think right now is a good idea, then that's not a good idea. Hope, right? Well, I hope now is a good time to get in. That's not a good idea either. Or fear. And that's going in line with what this video here is about, right? Fear of missing out. And I'm doing this video based on this gold right now. Now, I did a video, I talked about gold, how gold has been going up for quite some time right now, you know, and I was saying that wait for a good pullback in the markets because you never know where the point in this rally, in this phase, in this move up is going to end before we get some sort of sideways movement or a pullback. It will do that, right? Like it just happens. You look at this chart here over the last pretty much 10 years. Every rally or every move up is gonna be inside of a sideways movement or a pullback. Now, we don't know where that point is, right? I mean, the point of where the sellers or the profit takers start to take profit and the sellers start to come in and knock it back down and the buyers start bringing it back up. But please do not chase the market. Please, and that chasing the market really is you getting in because you're fearful of missing out. Do not chase the market. If you are, just before you get into a position, you must say to yourself, like right now, you must say to yourself, am I getting into this position right now because I'm fearful of missing out and I'm listening to all the hype about the big bull market and so on and so forth? If you are, I guarantee you it's the wrong decision to do. 9 times out of 10, if you get into something because you're fearful of missing out, I guarantee you that most of the time you get into that, especially when the market's going up, you get into it. Guess what's likely to happen most of the time? The market will pull back against you. So that happens so many times. So don't chase the market, aka or i.e., don't get into something when you're fearful of missing out because the number one rule to investing or the number one rule to even trading is to keep your powder dry. I mean, keep your money in your account to when you do get a good opportunity, you can pounce on it and benefit from it. That is the number one rule to trading. And you throwing your money at bad or hope or what you think is a good idea right now, or you're fearful of missing out, is never a good idea to get into the markets. If you want to have longevity, see, I don't care about what you do. I don't care about, I don't really care about 1 or 2 different trades. I'm all about coaching you and teaching you to be a long-term successful trader. How do you be in this market 10 years from now, where the average trader is likely to be blown out of the market 6 to 12 months from now and say it wasn't for them? I don't want that for you. And one of the key principles that has kept me in the markets now for over 15 years has been me learning that lesson time and time again, which is don't chase the market. Don't be getting into something based on fearful of missing out. And that's where every time you enter a position Be self-aware of what you're thinking and your thinking habits behind a trade. And if you're going to get into something based on you're fearful of missing out because you think the market's going to crash tomorrow and you better get in right now before it crashes tomorrow, or you better get in right now right before gold takes off, that's never a good idea. Again, I want you to be in these markets for 10, 20 years from now, and 10 years from now, you're doing multiple six figures, if not seven figures, and doing really, really, really well. And I want you to continue getting better week after week after week after week, right? And month after month. And even if you're starting with a small trading account, how do you potentially take that small trading account of maybe $5,000 or $10,000? How do you turn that? And maybe 5 years from now, you too can be a seven-figure trader. How do you actually get to that point? That's what I want you. I want you to build good, successful trading habits. So long term, you can kick the market and you can do really well. 95% of the traders who will listen to this are not going to be around 6 to 12 months from now. And that's the unfortunate thing. And one of the reasons why is it's never the market. It's because we're getting into things like fearful of missing out. And most of the time, by the time we actually get to that point of fearful of missing out, it's the wrong time to begin in there. Slow down. If you're going to get into something that you're fearful of missing out, stop and do not do anything. I would rather your account be flat than try to get into something like that. And it's really based on you hope it's going to continue up, right? Wait for a good time. I don't care if you missed out on this move on gold. Guess what? There's going to be another amazing opportunity. There's going to be a pullback. There's going to be amazing opportunities in the stock market. There's opportunities everywhere. Do not be trying to chase this market. Wait for good opportunities, then go at it. So I've spent almost 20 hours studying the past boom and crashes in the markets. We'll talk about the 1987 crash, 2001 crash, and the 2007 crashes. And one thing I've noticed amongst all these crashes is that there is two patterns that actually form in these markets. Now, the first pattern is a signal that there is a potential top in the markets, and the second pattern is like a confirmation before we start the bear market or that crash. And I've studied this, and what's happening right now in the markets is we have just formed the very first pattern in today's market right now, and all we're looking for is the second pattern. So over the last 20 hours, I've noticed all these have very, very, very similar patterns, and these two patterns show up again and again and again. And I'll spend 20 hours looking at this. So this is what I'm going to do right now. As you know that I have the Trading Secrets Weekly. I've just launched this where every single week I do live coaching and training, and you can get a free trial for 1 week as well too if you go to tradingsecretsweekly.com. In my next training and coaching session, I'm going to be sharing with you the two patterns that have formed over 1987, the 2001 and the 2007, and I'm going to share with you exactly what those two patterns are and how the first pattern has already formed in the stock market right now, and all we need now is the second pattern to form to start the potential next bear market. If you are interested in that, and I'm so excited to share with this, go to tradingsecretsweekly.com right now, sign up for your 1 week free trial, and I'll see you on my next live training, and you'll be able to see that all in detail. So go to tradingsecretsweekly.com, and I'm going to share with you all the details. I'm going to show you the 1987, 2001, the 2007, and how the very first pattern has already formed in the market right now. I'm going to show you exactly what it is, and also what to look for in the next the second pattern. Because if the second pattern forms, it's going to be absolutely amazing on the downside. And once you're ready for it, you can do really, really, really well. So go to tradingsecretsweekly.com right now, sign up, grab your free trial, and I'll look forward to seeing you on my next training and coaching session where I'm going to share with you all the details. So go do that right now. Go to tradingsecretsweekly.com, sign up for your free trial, and I'll see you on the next coaching session.